Hello and welcome to this month's market update. I'm Casey Lowe, Senior Consultant, part of Frontier's Capital Markets and Asset Allocation team. In today's video, we'll cover two topics, inflation and the broad recovery in Australia's economy. On inflation, it is a key topic of focus for markets right now because the current assumption is that the economic recovery will continue and will be supported by both monetary and fiscal policy, both broadly staying very supportive. Now, if inflation increases and stays persistently high, then that may force central banks to increase interest rates much earlier than what the market is currently expecting. This could derail the recovery, partly because it's still in a very fragile phase, but also because there's a lot more debt in the economy now. If you look at current inflation rate in the US, so over the 12 months to end of April, inflation is about 4.2% in the US. Now, that's quite high compared to its history, but there's a few reasons for this. The first one is the low base effect. Now, what I mean by this is that because inflation dropped very sharply back when we had the lockdown 12 months ago, any sort of increase in inflation compared to that lower base will look a lot larger. Thus, we call it the low base effect. The other reasons for why inflation appears higher right now is that we are seeing pent-up demand come through as economies reopen. And as a result of that, we are also seeing supply bottlenecks to meet that increased demand. So there's a few reasons for why inflation is a bit higher right now. But the key question right now for central banks is whether this spike in inflation is temporary or if it's more permanent. Now, one of the reasons that suggests for why this could be more of a temporary spike in inflation is the US labor market, which still has a lot of room to recover. Unfortunately, the US labor market lost about 22 million jobs in the March-April period of last year when we first had the pandemic and the lockdowns. Now, it has been recovering since then, but it is still about 8 to 7 million jobs below its pre-pandemic levels. So it suggests that it still has a lot of room to recover and there's a lot of spare capacity, which should limit pressures on inflation. But then when you look at surveys of American businesses, like in Australia, a lot of these businesses are reporting that they are increasingly finding it difficult to find suitable labor to fill new job openings. So that suggests that maybe there is some pent-up pressure there, but also that the labor market should continue to recover. So linked to that is the next topic, which is the recovery of Australia's economy. We've recently had the release of economic growth for Australia. Now, over the 12 months to March 2021 quarter, Australia's economy grew by 1.1%, which is a really good result when you think about it, because we're one of the few countries in the world so far that has actually reported their economy to be larger than what it was pre-pandemic. There's a few reasons for why Australia's economy has recovered really strongly. The first one is on investments. We're seeing a recovery in business investments, but also dwelling investments supported by low interest rates, booming housing market, and also the government's home builder scheme. The other component is that consumption is recovering as the economies reopen. As I mentioned before, pent-up demand is coming through now, particularly on household consumption. In the near term, though, the fourth lockdown in Victoria may hinder some of this recovery playing out now. But broadly speaking, when you look at household savings rate, it has been coming down, but it is still at quite elevated levels, which suggests that it should continue to come down. So that suggests that consumption should continue to support the economic recovery. So in summary, inflation is a key risk to watch out for, but there are a few reasons for why the economic recovery should continue. That's all for this month's video. I hope you found it useful. Thank you for watching.